Alexandra Lienhard with Elliott Wave TV, and I'm joined today by Jeffrey Kennedy, Elliott Wave International's Chief Commodity Analyst and editor of our Commodity Junctures newsletter. Jeff, I know it's been a while since we've talked, so thank you for taking a couple of minutes to chat with me today.
My pleasure, Alex. Hello.
So I wanted to get your take on recent volatility in the commodity markets. Commodities have been a hot topic in the news recently, with many markets at multi-year lows. When looking at commodities from a big picture perspective, do you expect the recent trend to continue?
Well, that's a good question. Actually, what a lot of people don't understand is that the commodity markets have really been very volatile for a number of years. Some markets or some commodities that I look at actually topped in 2008, for example. Then we had a number of commodities top in, say, 2010. And then we even had a number of commodities top in again in 2012. So really, the commodity markets as a whole, they've been very, very volatile and have seen sizable sell-offs. In fact, we've actually seen some commodities be cut more than half in actual price over the last 3 or 4 years. Now, as far as will this trend continue? Well, short term, say as we move into the final quarter of 2015 or the first quarter of 2016, I am looking lower. So simply put, over the next 3 to 6 months, my focus in many of the commodities I follow in commodity junctures is still very much to the downside. But there's a backstory that we probably need to discuss as well, and that's the secular commodity bear market that we're currently in.
And you touched on this briefly. You said it's been going on for a long time. And I know the last time we talked, you touched on, or we talked a little bit about the 30-year commodity cycle, and you explained that extreme volatility accompanies commodity bear markets. So in this 30-year commodity cycle, where are we exactly, and what does that mean for investors and traders going forward?
Well, the commodity cycle, the long-term commodity cycle, is a cycle that's from top to top, roughly about 30 years, and also from bottom to bottom, it's also roughly about 30 years. So the last time we saw a commodity cycle top was in 2010, before that 1980, before that 1950, and so on. Now, as far as commodity cycle lows, they occur also on a 30-year cycle, 1970, 2000, and the next one I'm anticipating for 2030. Now, what's interesting about this commodity cycle is that the up moves, the advances, they only last actually about 10 years. It's the moves to the downside, which are very long and very laborious, and they last 20 years. Now, this is 2015. Commodity cycle topped roughly in 2010, so we're 5 years in to a 20-year secular commodity bear market. So we still have about 15 years of volatility looking at us as far as commodities go. Now, from my analysis of a secular commodity bear market, two things seem to come to the forefront. Regardless if I'm looking at coffee or say soybeans or even gold. The moves to the downside typically last about say 2 to 3 years, and then they're followed by counter trend moves that also last about 2 to 3 years. And as you've mentioned again, and as I've mentioned previously, a secular commodity bear market is really denoted by extreme volatility. So we'll see these periods in time where markets will say lose 50% or 75% of their value, like for example, like what we've seen in say some of the grain markets. And also some of the softs. Of course, crude oil, gold, they've been coming down for actually many, many years. Well, at some point, they're going to bottom out. And again, I'm anticipating this low to be late 2015, early 2016. And then that's going to give way to a counter trend move, a bear market rally that should last about 2 to 3 years. And where, again, we'll see actually commodity prices most likely double from current levels. So again, what denotes a secular commodity bear market is extreme volatility, where we're down hard for 2 or 3 years, and then we're up hard for 2 or 3 years.
And the last thing I wanted to touch on is you're hosting a live Commodity Junctures event for free next Wednesday, August 12th. Can you give viewers a preview of 1 or 2 markets you're looking at ahead of that event?
Well, actually, no, I can't. And the reason why is because what I'm essentially going to be doing is I like to see what's going on that day or that night and what's most relevant, what may offer the highest probability trading opportunities, what markets are offering me clearest wave patterns. So usually I decide, say, maybe the day before or earlier that day, what I'm going to be covering that evening. So as far as what I'm going to be discussing next week, as far as our live event, I'm not really sure what we're going to be looking at, but regardless, I know it's going to be exciting and certainly, I hope, educational.
So, in summary, it sounds like from a big picture perspective, you expect this volatility to continue for upwards of 15 years. And from a short term perspective, viewers will have to tune in next Wednesday to your free Commodity Junctures event to get your latest forecasts.
I think that's a great idea.
Well, thank you, Jeff, for taking a couple of minutes to chat with me today. I appreciate getting these insights and look forward to catching up in a couple of weeks.
Oh, my pleasure, Alex. Anytime.
For anyone interested in learning more about Jeffrey Kennedy's commodity forecast, please check out the link below to learn how you can sign up for Jeff's free Commodity Junctures event next Wednesday, August 12th. Thanks for watching Elliott Wave TV.